Alrighty, good morning, everybody. It is Friday, March 7th, excuse me, of 2025. Just kind of hilarious to me. It's just incredible, this stuff that happens here. So 8:30 in the morning, Eastern, we have that news drop. The market sells off and bounces basically to the tick, right off our roadmap level at 57.36. Pops out and comes right to the back end of our next roadmap level up top at 86.75. And then we pull back. We hold the back end of the next roadmap level. And now, as you can see, pulled back a little more, bounced right off the roadmap level, and then failed right off the next roadmap level. You can see the actual level to the tick, 57.60 half. The actual swing high, 57.60.75, one tick. Bearish divergence, testing the back end of the 200, the VWAP, the Holy Orange power level, and again, that roadmap level at 60 half, giving us this nice pullback that we're currently in. So again, just blows me away every minute and every hour of nearly every trading day, watching the way price is reacting around these areas. But I do want to talk about maybe some teachable moments yesterday. So let's go back to the market open. And if you guys were in the pre-market planning session, which was available for anyone in the world to come right into our Discord and watch, we were looking at a potential bounce from the overnight low, right? And we were doing our pre-market. I mentioned that we had bounced right off the roadmap level at 57.70, and we had a lot of clues that this could be the beginning of a potential rotation. Now, we were in a heavy market. We didn't have, daily time frame signals for the bulls, indicating a potential larger breakout back to the upside, but some type of bounce made sense from 57.70. Again, we had that 3-minute, 15-minute, 30-minute, and potential hourly, I believe. So everything kind of lined up there for a bounce. And as we continued to do our pre-market broadcast, what happened? We came right into the 200. There actually was a beautiful short opportunity there. And we'll just look at that because this should be a pretty quick lesson this morning. But you get that textbook. I mean, guys, if you're here watching this stuff every day and we're in the pre-market and you see the price come right to the 200, first tag of the 200 in this big sell-off, the first tag ever since the crossover, all the way back here at 2 in the morning. I'll just make sure that is right. And you see them come all the way right back up to the 200, and you see this divergence forming as it peaks into it. And that's that typical peak above and fail pattern, bearish divergence, or at least potential that you can see there. I mean, guys, it's worth a shot. It's the first tag after a major sell-off, right? You've got the divergence, you're testing in, and you know your risk is really limited. Now, if you got it, it's not like it turned into a 50-point trade from there with very limited risk, but it was a great opportunity that gave you, again, that was actually, the more you look at it, that's like a 15-point sell-off. Never came back to the swing high, right? You know you're wrong up above at 92. You ride it down for a nice 10-pointer to the downside, maybe taking profit first at 57.81 here or 82 for 6 points. And, you have yourself, before the market opens, which was right here, you have yourself a great little short opportunity, and it really never came back, hopefully, to take out your stop. You actually got pretty much the sell-off coming into the open, right? So anyway, that's kind of a digression. What I wanted to talk about here was looking for or interpreting and kind of navigating and changing your perspective when the market gives you new information. So let's go back here after my digression. We had 3-minute, 15-minute, 30-minute, and potential hourly bullish signals down here. we bounced basically to the tick from an expected support level and started to actually break out through the first resistance here. Really the first resistance being the FMA, which by the way, did come right to it and get the beginning of a pullback, right? But popped through, pullback, held it for the bounce out, and we got through that first major roadmap level. Okay, this is kind of a more, aggressive level to be trading. So we break out through that first major level, and it looks like, hey, all that stuff Justin was just talking about for the bulls is actually starting to transpire, right? And they start to come up, and then bam, you get your reversal, little short time frame reversal pattern off the 200. Again, one of my favorite little plays there. And then they come back. And notice what they do here on the pullback. It's a textbook 50% retracement. So in a sense, or it really was probably a 61.8. But again, 50, 61.8, that's textbook trading, Fibonacci trading, right? So comes back and you retrace by, again, the 61.8 right there, holds it, holds it, holds it, ducks through a little bit and goes. How common do we see that type of price action? And then they come right back up and fail off the 200 again. And on that second high, you get a pretty extreme divergence from there, right? So pulls back, and right there, you kind of have to tell yourself, even though I had all of my shorter time frames lining up for a bullish bounce, if I missed out on getting long here or buying that pullback into the 50 to 61 and maybe getting a couple points into the 200, if I missed out on that, and now I have a basically kind of a double top from the 200 and they're rejecting off of it, well, my bias for the bulls here might be over with. And I know that if we come back now and we break around 50, 61.8 of that leg and come down, I need to start to reconsider whether or not I want to jump in on the long or expect something to happen at the low again. So the way I think sometimes, if I'm a bull and I'm thinking I want to get long from here, and it comes up and rejects off the 200, I know that typically we're going to get, if this is going to continue to go on the long side, we're typically going to get a pullback to one of the roadmap levels for the bounce out. So this is kind of a side lesson here. But if you have a bias for a long and you see the markets pulling back, that's actually a short opportunity into the level that you would expect to see bounce for a long. So you could actually short this, even though you're a bull looking for a long. If you're pulling back from a typical setup here, you actually can get short into the next area that you're expecting to see the bounce from. And again, that was just kind of an aside there, if you will, or another thing to think about. Same thing here, when they come back and they test into the 200 again, we get our divergence and we start to fall through that first major roadmap level. You can again kind of think of this, even though you're a bull from here, you can think of this like, okay, we tried to get through the 200 two times. We're now failing through the first expected support level, our strong support area. And so you could interpret that like, well, now it makes sense because the bulls had trouble from the major short time frame moving average. They're most likely going to come back and test this low. Doesn't have to happen. They could come down, bounce right out, or they could come down and all the way down to here and bounce out. But the idea here is there was a bullish idea from the lows, from the roadmap level. We got a rejection off the 200 twice, which is telling you that maybe they're going to come back and retest this low. So it gives you kind of a short position, at least into that swing. And then you need to reconsider what's going to go on for your bullish potential. Because a lot of times, what do we see? We see a hold from a major roadmap level. We get a nice bounce out. It starts to look strong, say for the bulls. And then they come all the way back at some point, only to make a double bottom and then go for the larger move. right? Because a lot of times, what do you think that the banks, what do you think all the big traders are doing? They know they want to take the market long, but they want to take as many traders out on the way, right? We see it happen all the time. That's why I tell you almost every day when we're coming into a level and we're kind of pulling back and there's not a good signal for, say, the bulls in this case from this level, I tell you it makes sense for them to come right back and either make a slightly lower low and then bounce out, or come back and again make some type of double bottom and bounce out, or come back to that major swing low and then bounce right in front of it, kind of teasing everybody, probably waiting just a little bit further down here for that slightly lower low, and they bounce just in front of it and then go. So we know that is typical price action. We know that they like to take the retail traders' money, and so that's typically what happens, right? So if you're in some type of bias for the longs, and then you get new market information, in this case, rejections off the 200, which is a very clear signal to us with the way we trade with our system, you need to start thinking about reconsidering your bias, right? When new market information comes in, when rejections or supports come in from areas that start to negate your expectation, you need to start to think about the inverse of your perspective, right? So in this case, we talked about it while it was happening. So yesterday, we talked about seeing everything lining up for a bullish bounce from 57.70. We did get a 20, 30 point bounce from there, 20 points. But then this, and I told you as we were watching it, this is now a nice clue that this whole play may not work out. Or at least I think I talked about that, right? And then as we came into the open, they were all the way back testing that low. And so we still kind of saw some potential bull stuff. But what happened? Again, interpreting what's going on in the charts. Okay, they bounced one tick in front of the roadmap level, but right here, rejected right off the 200 again with a whole bunch of bearish divergence on that swing, right? So, hey, looks good for a long here. Maybe I get long. If it rejects off the 200 and starts to loop back around right in here like that, you need to start to think about what's going on here. You might have clues for the bounce, but once we reject from the FMA, it's a clue for that retest of the low, right? Same thing here. This is a very aggressive level on the shorter time frames. This is a slightly less aggressive. This is typically it's that 200 mean, right? So in this case, it's a slightly higher time frame area, but same thing. We come into it and fail. We come in a second time with more divergence, fail again, and then break the swing low that was there originally. Not looking good for whatever bullish case you had, right? And again, you have to kind of expect the market's probably coming back to test that low and go, or kind of push through it, take all the stops out, and then go. And then the other side of it is sometimes a signal will show from a level, but it takes time to develop, and it'll slowly whimper lower and lower and kind of bounce from this area. And then again, we're at a roadmap level. The signal's starting to continue to show on some of the higher time frames. It kind of bounces again, but then look what happens. This is, again, beautiful, teachable information here. If everything lined up on your intermediary time frames, slightly higher time frames from your 512 tick chart, and it starts to look strong, but then this happens, and look, it's the same thing. It rejects not only off the next major roadmap level here with, you could argue divergence, but not necessarily the sexiest there, holding from there, and again, giving that beautiful kiss of the 200. I actually watched this as it was happening and was tempted to do it, but I did not get a lower swing here on my RVI, so I didn't act on it. And hey, sometimes you don't get it, and it works out perfectly. So that would have been great. But you can see, once again, I was still looking at potential bullish signals on I might as well bring it up here. This is what the 15-minute chart was looking like as we were selling off yesterday into these little areas of support that we were expecting, right? So there's 57.70. Look at that beautiful pattern. You start to get this huge buildup of divergence, and then it rolls over and you still see it. It continues to build. And then eventually you get to the low, which was all the way over here, and then we get a bounce, right? Or actually the bounce really happened right over here for the larger bounce. And then look what happened, and we're going to go down to the short time frames again. So these signals can build up, and that's what's frustrating with trading is sometimes you get the clues and it builds and it builds and it keeps going against the position, and then finally you get the major low. Again, they're probably taking all the stops and then bringing it right where everyone expected it to go, right? So it bounces eventually, comes all the way out where everyone probably expected it to bounce to on the first 57.70 and 57.60 area, comes all the way up, and then what happens up here? Let's go ahead and bring it all the way up. They come right into the holy orange power level and 50% of the day before, and they test, and they test, and they test, and then bam, fall right back through VWAP. So look what happens here. You get this change of phase. We get back up through the two moving averages. We get through VWAP, which is now a good clue for the bulls. They pull back off the roadmap level, not surprising. Hold the VWAP on the pullback. Get up through that next roadmap level, pull back, use it as a support. Get a little bit of a deeper pull. There's the bounce off the 200, the rejection off the FMA, and then the bounce to the tick off VWAP. So again, just some beautiful opportunities in here if you were looking for trades. And then they come all the way up, and then that is it. They peter around, and what's so interesting to me is they basically just hold the roadmap levels, right? They get into this one, they try to hold above it, peek through the VWAP, hold back above it, and then here they just kind of parry back and forth from the two areas. Now in this case, you're right, it wasn't to the tick. They didn't come right to Hopeful to the tick and hold it within a couple ticks. They did push through a little bit, but for all intents and purposes, they could not hold above 50% of the day before, which is the magenta line. And then again, we had Hopeful there. So they hold 50% of yesterday, which was the level we wanted to see the bulls get above and hold above for our bullish bias. And then after that third test, we fall back through VWAP. So again, if you're all about the bulls, and this whole lesson is about changing your perspective when new information comes into the market, right? So now it's looking, once we get the low of the day, and it's pushing and it's pushing and it's pushing, you're thinking, this is it, man. We're about to break out through 50% of the day before. This is it. I'm going all in on the bulls. But if you start to see all this weakness from 50% of the day before, the level we want to see the bulls push price above, and then it falls through VWAP, right? This is not just holding from 50% the previous day. It's then noticing that we broke through the major support area that we were holding and falling through the VWAP. That is your first clue here as we reject from a key level and fall through the VWAP, that bullish perspective could potentially be ending, especially if all your signals up top are pointing for the bears, right? Now, of course, in a strong bullish market, you're going to have a pullback for a bounce to higher highs. Very, very healthy market to see retracements and then bouncing. But this is that first clue. You get the rejection off the critical level you want to get above. You have the crossover of your first moving averages. This is the first sign, really, of potential weakness. And then you get down through VWAP. You have all the moving averages move into that bearish orientation where you have the longest moving average at the top, and then as we get to the shorter time frames, they're all in orientation like that. Each one's lower than the next. And then you fall through the major support that was holding for a couple hours before we got into the lunch hour there. And then they even come right back to the back end of it here, that last support area, and that's exactly where you get your double top, bearish divergence on that second top, and the continuation. Right, so that's your first clue, the crossover, rejecting now for the third, fourth, fifth time from 50% of the day before, and then the fall through VWAP and the actual major swing low, and then there you have it. Okay, so again, this is about changing your perspective when the market starts to give you new information and it starts to either respect or disrespect levels that you wanted to see hold. And so then from there, you can see on the way down, just some very aggressive trading to the downside. Again, in an aggressive market, holding the back end of the fast moving average the entire way down, right into the low of the day before. So you had great opportunities in here. Once we broke through the VWAP and got through the major swing, it then became a great short opportunity to the downside. Okay, and that's basically it for our lesson. We're running into our pre-market planning now. So let's go ahead and jump to the higher time frames here, see what they have to say for this morning.